Alrighty, well, welcome everybody, and a big shout out to George who requested this video. We're going to be talking about one of the most important things you can do in trading, and in my 16 years of trading and learning, it's always learning, you realize that risk management is one of the most important things. Sure, you're always after profit, but are you looking at protecting your capital? And how do you do that? So one of the things you'll learn if you ever do any trading courses, which I've done, you'll find that one of the best strategies you can do, whether you use a broker or an exchange, and this is how you can tell if an exchange is any good, it'll give you the option to set up a stop loss. And a stop loss basically says you're telling the exchange that if a price falls to a certain point, pull me out of that trade, because at that point there, on a technical level, the value is depreciating to a point where I'm not prepared to lose any more funds. And so by your capital, as the price comes down, your capital is going to decrease and diminish. So what you want to do when you're trading is set yourself up with a percentage loss that you're prepared to deal with. So let's say you had $10,000. You don't want to lose more than $1,000 of that per trade. So if you're putting $10,000 on a trade, your maximum risk would be $1,000, which is 10% of your capital, which is originally $10,000. So what you want to do is then make sure that if you bought in at a $10 fee for the token, that when it hits $9, I want out. And so then it executes a sell order once it triggers that price. So I'm going to take you through this video. Will be a quick tutorial how to do that. So when you're in Australia, most people are using the best exchange, in my opinion, which is Coinspot. And Coinspot is very straightforward to navigate. One thing I love about it is its setup is very simplistic, has all the features you need right in front of you. So what you want to do is you want to go to your wallet, whichever token it is that you're trying to put a risk management stop loss on. You'll click on your wallet, click and open the wallet. So in this case, I've opened Veracity wallet, and you can see up here you've got three tabs. One is buy Veracity, one is sell Veracity, and one is swap. The fourth tab is the charts. Now what you want to do is figure out your price first. So you want to go into your chart, click on your daily, so you've got a less noise from the overall time frame. So the smaller the time frame, the noisier it is. Check this out. If I go 15 minutes, look at all that noise there. I want a summary of that, so I'll go up to 1 hour. And then I want a summary even of that, so I'll go up to a 4 hour. And obviously different traders use different time scales, and in this case it's a 4 hour chart, which is still pretty good. It'll give you a lot more movement of price action. Now we're going to the daily in this case because I want an overall summary, let's say, of the last 12 months. So if I scroll down, I can see the dates are down the bottom here on the chart. And there's a thing called logarithm, which if you scroll down, what it does is it gives you a sort of more of a balanced look, whereas if you go to auto, it'll go back to take out logarithm, and it will work out the numbers according to a certain scale. So by playing with that, you can see that, but that's not too important. What's important is that you've got your price action on the side here. Now in this chart, we've had one really good leg up and a pullback. We've had a second push up and a pullback. Is this the third push up and a big pullback? Will we see more consolidation or more downward action? If you are unsure or if you're concerned your capital is going to diminish at a certain price, now we want to figure out what price would that be. Now in technical analysis, we're just keeping it simple without going into all the detail. Here is a previous top. So we want to be looking at, and it's funny enough because one thing about the charts is they don't lie. This part here being a previous top is a significant price point that we can look at, which is 7.5 cents in Aussie dollars, Australian dollars. And you can see that's roughly where all these bottom points have touched. So there's significant touch points, I call them. So even here, if you look here, this previous top without the wick was at 6.8 cents. And you can see that's where the previous top hit and then retraced back from there. Then eventually it cracked through. Now, this can go in either direction. It can crack through up or it can crack through down. That's what we're trying to protect our capital from. So in this case here, 7.2 cents is the bottom, let's say, of this significant support area. So if we draw a line here, horizontal line, boom, right there, Did that work? There we go. Can make that a bit thicker. Let's bring it up to there somewhere. Beautiful. Cool. So you can see that support line. We'll call that support right now because while the price action is above that, that is support. If it breaks down below this, that's when I'm concerned. That's where I feel like the trend is changing. And again, this comes down to understanding how to read trends and chart and price action and technical analysis. And I can do things like, obviously that's what I do in consultations, but also in an online course, which hopefully we'll get time to develop in the near future. But for now, we'll just do quick videos where I can give you guys a little bit of information. So in this case here, my decision will be, all right, I don't want to lose less than, let's say, below this price here. Let's forget percentages. So you can work backwards from percentages. So if you're putting in 10,000 at the price, whatever the price is that you got in at, so you'd have to work that out. So if you bought in at 8, right now at 8 cents, 8.4 cents. Okay, so you've executed your buy order, great. Now you want to protect the capital. So I want to say 10% of that is actually 8 cents, an eighth of a cent. So we would say work backwards and it would be around this point here that the stop loss would be. But one thing about stop losses is you want to give them room to breathe. Now, if you're being very strict with percentage, that can also not allow your token to breathe, and that's where people can get snapped out of the game pretty quickly. So what I like to do is work out, all right, work based on technical analysis, where do I want to put my stop loss? So I'd be going just below this point here, which is at 7.1 cents. So forget the percentage thing, that's more advanced. Actually, no, it depends which way you look at it. See, this is more advanced because you're using TA, technical analysis, to figure out the chart. So you need to know what you're doing and how to read your chart. Whereas on a fundamental level, if you're just going in with a certain load on your capital and you just take away the 10% margin, or 15% is a really good point to put your stop losses. And some people are even go as far as 25%. But that's a decision you've got to make and really work through, what percentage you're comfortable with on your capital. If it's a long play, you have to give it more room to breathe, which means you need to give it more percentage of a downwards action. But in this case, let's go with the TA because that's how I like to work with. So I'm going to look at this chart and go 7.1 cents. So let's get into the stop loss component. What we would do then, we can go back or we can just click on sell, VRA, VRA. Now up here, you'll see the significant titles. There's buy VRA, sell VRA, swap VRA, and order VRA. Most important point is to click on order VRA at this point here. Now you know veracity is at it's at 8.1 cents AUD. Now look carefully here. You see here it says if the veracity sell price falls to, this is where you enter your value that you don't want to go below. So I'm going to put 7.1 cents. That's the value that will trigger my stop loss. Once it hits that, it sells me out. Now there is slippage sometimes. It doesn't mean you're going to exactly get the 7.1 cents. It could be that you'll get it at 7 cents or 6.9 or 6.8, depending how volatile the market is. So if it crashes pretty quickly or the price action drops very fast because there's a big sell-off, then you'll only get what the market allows you after that point of 7.1 cents. So there is a component where you will potentially, if it's a fast volatile market, you will get less than your preserved capital requirements. However, if the market's just casually moving around, you'll pretty much get the price that you put. So in this case, it's 7.1 cents. Here we go, and we type in how much money worth we want to do. So in this case, available. Okay, so I've got some tokens locked up. So in this case, all that's actually available to sell is, you can see down here, Vera available is 226. So I can just write sell max, which is what I've got available left because I'm actually staking the rest. There's probably about 8,500 staked. So my 8,500 staked have earned this 226 in the last few days, and that's why it's available. So then I would just write, okay, at 7.1 cents, sell what's available in my portfolio, and then set stop loss. So once you hit set stop loss, it'll give you a summary, and it will tell you, if you read that out, if the veracity sell price falls to 71 cents. Remember, that's the sell price, not the buy price. Buy price is always going to be a little bit higher because that's where they make their margin and pay exchanges. And then it says, I would like to sell 226 Vera. that's your trigger price, that's your fee that you'll be paying, and that's the total that you'll be returned in your account. So you'll hit confirm stop loss. Let's do that. Let's hit confirm stop loss. Now, you know your stop loss is set in place, so now you can go to sleep knowing that you won't lose your capital. Now, if I go here to open orders, I can actually change that if I need to. So here we go. On the 29th of November, which is today, I've put a stop loss for Vera and the amount of 226 tokens at 7.1 cents. That'll give me $16 value. Now, if I made a mistake on the pricing, I'll hit just cancel and start again. Boom, just like that. And it says success cancelled request. Beautiful. So right now I know that my stop loss is no longer, because I can check it here. I've only got these other two stop losses in place in this particular portfolio. So there you have it. That's how you do stop losses. That's how you manage your risk. You just need to figure out what price on whichever token and how much of that token you want to sell. You can always hit back if you need to go back and re-enter it. It's not the best way to navigate, but it is a way. So remember here, you've got order Vera, then it says stop loss. I don't think I pointed that out, but you've got 4 tabs up here. Stop loss, take profit's another good one to set, so you can go to sleep knowing that there is some sort of profit-taking target. Also, if it goes to a certain price to buy, also if it goes to a certain price to buy stop. So there's a buy limit and a buy stop. So you can check those out, but we'll keep it simple. Stay on the stop loss topic today. The take profit is very similar. I'll give you that because that's important. So if I hit take profit, if I say, all right, if the Veracity sell price rises to, so now you know it's rising up, let's call it $1. Why not? Put $1, then I want to sell 226 of those. If I wasn't staking the rest, I could put the full amount in there as well. But when you're staking, it becomes unavailable. I'll do a video next on staking as well because it's just come out here on Coinspot, which is exciting news, and it's really easy and there's no time lags to do the staking. Keeps it super, super simple. In this case, I'd say, okay, set a take profit. When Veracity hits $1, sell my 226 tokens. Again, you get a summary, confirm it, confirming, done. We can go to return to dashboard, or we can create another take profit for another token, or top right corner, drop down menu, open orders, and you've got a Veracity take profit there. Cool. There you have it, guys. So George, I hope that makes it clear for you as well, because you're the inspiration to make this video today, because it has been brewing for many months that I haven't had time to get to. So I'm glad I got it. It's straightforward now. You've got it. So happy stop lossing. Do that with, you can do that with all your tokens. Also with your take profits, you might want to set percentage rates, you know, 25% of your overall tokens. So if you had 1,000 tokens in Theta, you might sell 250 of them when it hits $20, and then another 250 of them when it hits $30, and so on and so on. So you're laddering your position out. And if you do that, you can pretty much go to sleep knowing that you've got capital stop loss protection and you've got take profit. So while you sleep, if the price spikes and it hits your target, then it gets you some of that profit basically in your account. So yeah, any questions, write them down in the comments, and I'll get back to you. And that's for anybody out there that if you've got questions about setting a stop loss. Hopefully that was really straightforward and clear. But make sure you hit like as well. Do me that favor. Help YouTube maybe recognize this channel and share it with people who need the help. All right, guys, have a great investing day.